Hello and welcome to Market Psychology 101, where we look for value in the markets when there's fear and are cautious when there's greed. In today's video, I wanted to do something different and talk about the Fed rate cuts. I want to designate a video specifically to just that and why it matters as far as the stock and crypto markets. And let's be honest, most of you here subscribing to my channel are here for the crypto news. So this does impact how the crypto markets react. You've probably seen that in the price action today. Let's go over to Bitcoin and you can see that on the daily time frame, Bitcoin has been going up in this channel, hit the upper part of that channel around 108K. We had a daily sell signal, came down underneath the 1618 fib extension. If you guys don't know what that is, draw a fib from the high to the low, take it off log. The 1618 was peaked above on the daily, but right now it has gone underneath. So it is at the price right now is at the 20-day moving average and getting near the lower end of this channel. We'll get more into that, but let's start out with the Fed rate cut. So the Fed did cut rates by 25 basis points yet again, and markets fell. So you may be wondering why that is, and I think right here sums it up best, that stocks plunged on forecast for fewer rate cuts. So what I want to do is go into the charts, at least the stock charts, and show you what has happened in the past when the Fed has cut rates and when they paused and eventually even started hiking again. So stocks plunge, as well as crypto, on the forecasts of fewer rate cuts. You can Google any Fed rate cut decision news article. You'll see a lot of articles that look the same, but I thought this paragraph summed it up best, that they lowered the rates by about a quarter of a percentage points, 25 basis points, and they simultaneously raised forecasts for economic growth. With that being said, you don't have to keep cutting rates larger or faster if economic growth is going well or if inflation is low. They would have to raise rates if inflation's picking up or the economy is running too hot, basically is what that all means. That also meant that long-term measurements on interest rates rose, pushing government bond yields higher and pausing the stock market's post-election rally. I already knew about this part because I got a notification saying that TLT, if you guys know what TLT is, was going down to a low price. So if we go to TLT, that's the iShares 20 plus year Treasury bond ETF. And guys, if any of this lingo is above your pay grade, and I'll be honest, it's somewhat above mine as well, that's okay. I'll try to simplify it and just share what it means in the short and long term. When the TLT is low, that means it's forecasted that long-term rates are going to be high. Why would long-term rates be high? One of a couple factors. One, as it said in that article, that the economy is expected to grow and do well. And two, inflation could also be expected to be high. So in order to combat hot economic growth and high inflation, then the Fed would be raising rates in the long term. So you can watch the long-term treasuries. Those will probably start to go up. We saw the dollar chart going up today. So when the TLT is low, then you start to hear about those concerns. So just something to keep in your mind. Let's go over to a couple of inflation charts. We've talked about this one, how typically, again, this doesn't have to happen, but there's a presidential pump and an inauguration dump. Again, not saying that has to happen. There's also Ethereum tends to do well in the start of the year. So one of those things would have to give. But I wanted to keep this more rate focused. And you can see right here, we've been following the dark green line, especially with the 10% drop with the yen carry trade. Basically, people were borrowing Japanese yen at a cheaper rate, buying assets with it. And when Japan raised rates, that caused a lot of trouble back here. And this chart, by the way, came out even before. This is just the average of what the market does. After the Fed first cut rates, though, we have been in a non-recessionary path. Going over to this chart, I think this one is the most important. I'll also show you the S&P pretty soon as well, is that when the Fed is cutting large and fast 50 basis points and they're doing that consecutively, that means something is broken in the economy, that we can expect more reddish days ahead. Yes, the Fed cut by 50 basis points in September. However, they didn't meet in October. They didn't have an emergency meeting, so they didn't cut in October. And from September till today, there's been an average rate cut of 25 basis points. And I think it's interesting that 1998 pops up here. And why is that? Well, let's first go over to the US interest rates and let's go back in time. So right now, you can see that the Fed raised rates. Let's take off the EMAs, clean this up. And let's take off our buy-sell signals too. I want this to be nice and clean and simple. The Fed raised rates to push down inflation. Inflation got somewhere around 2.5%, started to tick up a little bit recently. And now you can see in this chart, maybe it looks better off the log. There we go. September, the Fed cut by 50 basis points. They didn't meet in October, so there was no rate cut. But then in November and December, the Fed cut by 25 basis points. And if they're forecasting inflation or economic growth, both or one or the other, whatever, then it would not be surprising to see the rates pause out before going up. As far as this article is concerned, I'm curious. I just skimmed over it if they have any forecasts of where they're expected to possibly pause. Not sure it says it, but let's just scroll up a little bit. And maybe it doesn't. Here we go. Actually, latest projections. Where will the rates eventually go? You can see maybe a little bit under 4 to 3.75 might be the area where the Fed gets to a pause before going up. All right, great. So what has happened? Now the question is, what happens when the Fed does pause or raise rates? Let's go back in time and take a look at the last time that happened. When the Fed didn't cut all the way to zero, as they did after the 2008 great financial crisis, and here they cut all the way to zero. This was with everything going on with COVID, the COVID flash crash. They were also printing money, record low rates, all that extra cash, all reasons for inflation to take off. That's why they had to raise rates. Not really concerned about these areas. I think the more comparable areas here, because again, you can see the Fed is cutting very fast in those situations. 2019, they first cut by 25 basis points, but then they were cutting fast to zero. 2001, 2007, they were cutting fast. Again, 1998, there was some good market growth, but then eventually it started to, well, you guys can see that right there. It started to turn bad and the rate cuts got a lot faster. So let's go over to 1998. You can see here almost the exact month. So, well, it is. It's September down to December, funny enough, is when they cut. And then they paused and started to raise rates. What was the stock market doing in September of 1998? Let's go back to that. And I think if there are any comparisons to make, this might be important to look at. I can tell you exactly where it is because September 98 was at the local market bottom. Okay. The stock market was still able to go up for a bit. And these red vertical lines, by the way, I put those down on this chart to signal where was the Fed first cutting rates after holding for a while or after they raised rates. Where was the first rate cut? You can see here there was already a little bit of a dip, a 20% dip in the stock market, and then it was able to go up roughly around 60%. All right, great. And of course, we know this was the dot-com crash. By the time they started cutting large and fast, it went further down. So I am wondering if we are drawing comparisons. Let's say inflation isn't going to be as bad as the Fed foresees. There's two scenarios to look out for. If inflation is not going to be as bad and the Fed does pause and they do raise rates, well, what happened when they paused and raised? You can see the stock market still went up. And the peak here was, you can say, March of 2000. Again, let's go over to the US interest rates. Where was March of 2000? March of 2000 was right around March of 2000. We're almost there. Was right here. So it was just about when the Fed was about done raising rates. You guys see that right there? When they're just about done raising rates, that was the peak of the market. There was that secondary peak, as you saw. This goes out to November of 2000. Where were we in October, November of 2000? Well, that was right around here when the Fed then decided to cut faster, quicker, and larger. Okay, so again, this peak was right about when the Fed was done cutting rates. And I think we could see this style of a euphoric blow off top, things be good for crypto, stocks, and then this secular bull run would finish. That's one scenario. Another scenario I think it would be important to look at here, you might notice, what is this white vertical line doing here? Well, this white vertical line is when inflation was at its highest. So you can see there, I have it marked out, that is May of 22. And if we go to inflation and look for where the last peak was, we have to take this off log. You can see it right there, June of 22. I believe that was, we'll correct that on the chart there. So if I have to correct it, that's fine. It may have accidentally put it 1 month earlier. So June of 22. I wonder if I can, no, that's only on the weekly. So let's go back to that. Okay, June of 22. Maybe I move this on the, it's at the end of May, but let's put it in the middle of June. Okay. Well, what do you notice here? Where is the peak of inflation? The peak of inflation is near where the market is bottoming. All right. Yes, it did have a final landing here, but you can see the peak of inflation is where the market was bottoming. If inflation is to become a larger issue again, we can go back to the 70s. You hear all about that. And you can see that when inflation is spiking, it's usually not, again, it's the white vertical lines. I have them pretty well matched up within a couple weeks. You can see it's not too far away from local bottoms. So if inflation does start to pick up again by a lot, then you can take a look at when inflation is about finished peaking as areas to dollar cost average in. Again, this was another local inflation peak in late 1990, local bottom. This was another inflation peak here in June of 08. Now, this was a local bottom until the floor fell out, great financial crisis. So as far as that's concerned, I wonder if, I'm just curious about this. You can see when we have the moving averages on the weekly, the market was right at about the 200-week moving average. Most of the time, if you're buying in the stock market when we're at the 200-week moving average, tends to be a pretty good low. And ever since the great financial crisis, you can see that dark blue line tends to be the low. But as far as the great financial crisis, of course, the bottom fell out of the market. So do keep that in mind. Again, inflation peaking can be pretty close to where the market bottom is going to be. But of course, that doesn't mean that there can't be a much lower low to go. So what are my thoughts on the market right now? I have been making this comparison for a while that we are in this Fed rate cut cycle, that it is a currently non-recessionary rate cuts, non-recessionary rate cut cycle, and that we might finish this secular bull run that the market's been in for a while. You go to the S&P, you can see that since the end of the great financial crisis, the S&P has been in this bull run, okay, just going up in this channel, this big blue highlighted channel, ever since March of 09. So ever since that bottom, we've been in this ascending channel. As the Fed finishes pausing rates or cutting rates, sorry, we might see a little bit of a local bottom and then get to the euphoric blow off top where the S&P gets somewhere around the mid 6,000s, or at best somewhere you see the price to the right at around 7,000. Now, if we throw on our moving averages and our buy sell signal, why not? You can see, yes, there is a sell signal on the larger weekly time frame, and I've been seeing people panic online, and of course, the sky is falling, everything's going bad. But let's put this in perspective. Again, we want to use emotion as a indicator, not a decision maker. We want to look for value in the markets when there is fear. As I said before, what is going on right now? We have fear, we have a weekly sell signal, but look at the moving averages. The 20-week, these are the red lines, it's EMA and SMA. We haven't even gotten to the 20-week moving average. Also, this weekly candle, I think it's almost a doji, so that can mean undecided. As far as the daily, you can see, yes, we had this big move down, but what happened? This wick, where was it being bought up? It was being bought up at the 50-day moving average. That's the gold line. What moving average has this bull run really liked? Well, it is liked the 20 moving average, and you can see the 50 and the 100, the 50 and the 100, just the 50, almost the 100, the 50, the 50. You can see that's why the big wick is there, is because that moving average is being bought up. It might go lower. It might go to this trend line that we have below it. Okay, you can see this trend line we made from this peak. It's another line inside this parallel channel. We might get down to this area, which is, funny enough, the 20-week moving average. Okay, this is where we've gotten to at worst. This, by the way, when we got underneath the 20-week moving average, what was going on in August before the rate cut? I mentioned it earlier, the yen carry trade unwind. Japan raising rates, yen no longer being used as a means of conversion, of buying assets cheaper when that conversion was no longer such a good deal. It led to a 10% correction in the markets, in the stock market. You guys can see that here, around 10%. We can zoom in on the daily. I know it's more than 8%, I swear to God. So here we go, August. Let's fact check me, make sure I'm not telling you stories. There we go. You can see it right there, 9.6%. When you zoom in, you'll get more accurate numbers. Okay, we had that in the stock market, and then in the crypto market, I know exactly where that was. That was here. That was about a 30% sell off from the prior peak. So you guys see that there. We're to the top of that wick and to that red line. Okay, a 30% correction down there. All right, so that's what happened. But Bitcoin was staying in this bullish flag, this descending channel, and that was just the low of that channel. Yes, it got underneath on a wick, but as far as the daily candles, they closed within that channel, and we stayed pretty much at the 786. So I know people are saying the sky is falling, and as of right now, we are in this ascending channel. I'm not concerned unless Bitcoin is breaking down out of here. But even then, we have this double top trend line from 2021 peaks. We have the 50-day moving average. Heck, we have this trend line here at about 90K that has been the trend line Bitcoin has loved since the very bottom. So what do I like to say? Look for values in the market or opportunities when there is fear. If we do break down out of the channel, that does not mean we are no longer bullish or in a bull market. We are going to have downturns, and you can also see these moves when they get very disconnected from the moving averages. Eventually, they can come back down, have a little bit of a correction, and that is just fine. That is completely normal. So I know people are panicking out there. I'm here to tell you that's okay. Bitcoin isn't having a huge sell off or doing anything out of the norm. And let's just play with that 30% sell off. Let's say we get another yen carry trade unwind, things are going really bad, and Bitcoin goes down by 30%. Well, what's right around 30%? This 200, this dark blue line, this 200-day moving average, right at the peak of around here, and the moving average around here at around 74K. So at worst, if Bitcoin gets anywhere near 74K, hell, if it gets under 90K, I think you need to be looking really hard at opportunities in the altcoin market. Altcoins, of course, not doing so well today because dominance is going up. I was hoping these moving averages would hold as resistance. They have not. You can see the 20-week moving average that was once support. It is sort of a last resistance right now. The candle body has not gotten above it, just the wick. So it is possible we are just seeing a little bit of a correction before going down. We can also take a look at this on a Fibonacci scale. So we can just go from the prior low to high. Okay. And actually, I don't want to do that. Let's take off these moving averages. You guys get a little insight into how my brain works here. I like to do these things with you so you know it's not too scripted. Let's go from the high to the low. I think that works best. Okay. We go from the high to the low, trying to find where all the right peaks are. Okay. I know it's a little bit of a mess. All right. Let's take it. I guess it doesn't really matter. Let's keep it on log. So you can see Bitcoin dominance got just a little bit above the 618, came down to the 0.5, and it's possible it's just having another move up. And maybe if I were to look for an area for it to turn around, I'd be looking at one of these peaks, kind of this range, 58 to 59% in there. Let's zoom in on the daily. I'm looking where there's some sort of confluence or areas where we have peaks and lows that match up, even right here. Yeah, so I'd say somewhere in the 58 to 59% level. You'd see that's where we got this dip right here. And it might just, actually this dip and this peak would be a good area. I'd say anywhere around there, that 58 to 58.59%, we could see dominance turn around. Another thing to watch for is we have this VIX spike. Okay, what is VIX? It is the volatility of the S&P 500. This was the VIX spike back in August. Okay, yen carry trade, we talked about that. These VIX spikes have been typically, whenever we see a VIX spike, good or better value opportunity areas to buy. So if the VIX is going to stay up here at around 30 or so, or near 30, then you have to be looking for opportunities to buy in the market. Again, use emotion as an indicator, not necessarily a decision maker, especially if this is getting you to panic. You don't want to sell as things are already going down or selling off. Of course, nothing I say is financial advice, but when we have fear, when we have a high VIX, when there's all these things going on in the market, that's when I'm really looking for opportunities. All right, this is an interesting ad. Someone's drinking olive oil. That's going to make him sick. Right now, as far as the most updated fear and greed, it's still high in greed. We were up in extreme greed not too long ago. I would not be surprised if we saw Bitcoin greed come down to these lower areas, maybe at around, where was this area? Maybe somewhere in the 60s, low 60s. Again, the reason I wanted to do this video is because there could be more opportunities coming. People were getting pretty sure that we might be getting into alt season soon because we had dominance tanking, we had the presidential pump, Santa Claus rally, all these things. If we are getting near the end of a secular bull market, these might be some of the last best times to get into altcoins before there is an alt season. Okay. Again, not saying that has to happen, but if so, I'm looking at not long-term plays right now. I'm looking at more crypto plays, altcoins, Bitcoin miners. We might be seeing some of the last opportunities to get in before we have a bigger move up. Okay. And as far as getting to the lower end of these ascending channels, okay, I'll finish the video with this. You see how this channel is moving upwards? I sort of talked about this in a prior video this week. Let's go over to the daily so we can see it better. All right, I have to scroll all the way over again. Great. So let's take a look at the last cycle. This gray line was when Bitcoin was finally breaking up And you can see there were times where Bitcoin, when it gets into these channels, it can break up, okay? Or sometimes there's a little bit of a correction. Went to the fib here, all right? And this was where the top was. Bitcoin, it did break up out of this channel, but then it had a correction. Had a positive channel, a little correction. Had a positive move up to this fib, a little bit of correction, then it finished, okay? So all because Bitcoin has some struggles with its channel, whether it breaks up and corrects, that is normal in prior bull runs. And even just going over to the 2017 bull run, we'll take a look at what happened here. Again, look at this. You can see where there's different channels where Bitcoin has, it goes up, breaks up. Okay, look at this. Here's a channel moving up, broke down a little bit. Here's a channel moving up, breaks down a little bit. But then it starts to correct. Okay, starts to move up, breaks down a little bit. When I look at these charts, guys, I don't feel the need to panic about anything going on right now. You can see there was all these, look at all these corrections, okay? 2017 was amazing. Look at that, 30% correction. Look at this. This was in September. Imagine selling in September because Bitcoin corrected 40%, okay? If someone would have panic sold, maybe they bought Bitcoin at 5K and then it went down to 3,500 and they're like, oh God, I gotta sell. And then all of a sudden it has this big run up to, let's fix this fib here. Let's get that exact. It has this big run up to dang near 20,000. Okay. So 2017, there was those big corrections. Again, 30%, 40%. These things can happen. Don't let that fudge you out of the market. Let's take a look at 21. How big were some of these corrections? See right here, 17%. I'm just trying to give you guys perspective and get excited for opportunities. 30%, okay? And of course, there was a few corrections at the top. But by this time, Bitcoin dominance started to go down 25%. My point is this. The market's been moving up pretty good lately. It's okay if we see some of those corrections. That is why I have on these moving averages. And so I look for opportunities to buy at these moving averages. I get increasingly greedy and opportunistic as we get into the lower moving averages in assets I like. Anyways, that's going to do it for this bonus video talking about rate cuts. And let me know what you think in the comments below. Do you think we have a euphoric phase yet to come alt season? Are you worried about the market's reaction today? Is the sky falling for you? Or are you learning to be a good market psychologist? Staying patient, take a deep breath, don't panic, get off Twitter, get off X, all that stuff. It feeds on your emotions. Don't watch CNBC. The sky's falling, and usually, guys, like I said, use emotion as an indicator. When the sky's falling, you want to look for those opportunities, okay, and not get fudded out of the market. FUD, fear, uncertainty, and doubt. If you heard that term, don't know what it means. So thank you for watching. Have a wonderful evening. Take care.